Okay, what we'll do now is we'll go through the different teams, and I'll ask someone from each team to come up and just give us a 2-minute summary of the key learnings you had. So if we do Team 1, Scenario 1.
Well, basically, we went through a lot of different things. So in terms of actually going through the 1 to 6 scenarios, we didn't really do that. We just came up with lots of ideas. So there was a lot of things to do with actually, what we could do was actually help people while they were going along to try and make their insurance information easier or clearer. So some of that was discounts off petrol. So if you were driving well, then we'd say, okay, you can get a discount off your petrol. So it's more instant gratification because you've driven well, and we'll direct you to the nearest petrol station. We also talked about things like safe parking, so we could actually tell you this is a safe place to park, and also because if you choose to park there, again, you're minimising our risk. That would work quite well, and as a result, we'll give you discount off your parking, so we know, and there's a free space there at the moment, so you could go and park there. Again, redirection off your normal route, so you build up your normal route to work or whatever, so we could notify you before you get in your car or as you get in your car. Oh, by the way, something's happened, this has happened, that's happened, why don't you choose this way, follow us and we'll use your sat-nav to move that forward. Other key thing, sorry, I have now realised it's working. Other key thing was preventing faults, so using the sensors to prevent faults, prevent accidents, and work in that sort of way, but also to explain what those faults were. Because a lot of the time we sort of said, well, they'll come up on the dashboard. You have no idea whether that means you are going to have to pull over now and stop, or you could drive to your nearest service centre and get it sorted now, or you could carry on for a week and get it serviced in the next couple of weeks. So those sort of things would be really useful. And if you do have to go to a service centre straight away, but you can carry on driving, it would point you to the nearest service centre so you knew where you were going. Because all these things you just don't know when you're out on the road. And again, it would help. And the sensors on the car, again, could use accelerometers, that sort of side of things, to look at who was in the car, who hit who, how that all works, exchanging all the data. And if it was very, very positive and you had the right sort of information going through, you could make sure that you could inform your customer that actually you weren't at fault. So we'll reassure you right away that you're not at fault. You're insured. Here's the email that says what you need to do next. Take a photo, whatever. Can you capture the email addresses of the people that you've hit or have hit you? And as soon as you capture them, that then sends the emails and everything else along straight away to the customer and gets that connected from that perspective. Lots of other things to do with sensors and various other things on that side of things. We would then believe that actually it has a benefit across the piece, because it has a benefit to insurers because we understand more about what you're doing, we can minimise risk. It has a benefit to the automotive engineers because we can be clear about what's going wrong with those cars. They've got to get control about what's going on with their cars. We've got better links with various third parties. So you've got the cars, the petrol, car parks, petrol stations, and also feedback into government to actually understand where you're travelling to, what's going on, and that would be basically it. Okay.
Kevin, thank you very much. Thank you. Team 2, Scenario 1.
Hello.
My until deck.
You started.
I can start if you want. So we kept to the numbers. Sorry, we kept to the numbers. So we kind of think that everything's available today, but it's not joined up. So this is something that's evolutionary. So we kind of thought of this as really at the beginning of things. Yeah. We see a number of key trends. One is providing a platform. So we envision that car manufacturers and cars in the next 3 to 5 years will have a kind of platform that could be used for this capability, and it would be rich enough, have an app store that you could install applications and things like that. So we're starting to see, trends in the right direction there. We think one thing that's really key, and there was a lot of discussion around this, which was standards. So, and the standards have an impact on the economics here and the business models that could be derived from it, in the sense that if Aviva controlled the standard, then it probably wouldn't be so good for the consumer. But if there was an open standard, it would probably be better for the consumer in the sense that it would allow more business models, more startups to emerge on that platform. So real-time insurance pricing, stuff like that. I'm going to hand over to you because that was kind of...
It provides value to an insurance company. I mean, there's the sort of value it provides at the point of, as a pre-claim on the basis that enables us to better manage risk for the drivers who take the insurance. Because there's a pre-selection. People who take telematics devices tend to be better drivers. We also think they're not going to claim as much. Hence the reason they're prepared to have as tracking their data. There's a fraud prevention activity around telematics, in that you get less fraudulent activity because the device is collecting information. Therefore, you can't get away with fraud. And there's also a quicker notification of claims. So there's definitely some insurance company value. And I guess the point that the issue that we have is, I think we can see where there's a value for insurance companies. I think we're struggling to see where the mass market benefit is for consumers at the moment. So you can see where, if you're a young driver where you're paying £2,000 for your insurance, you may be prepared to take the risk that I could get a decent discount by taking this. If you're paying £300 for your insurance, you maybe wouldn't want to take that risk about, could my price vary up or down based on the quality of my driving? So there was the big sort of thing that we were talking about. What's going to turn this into a mass market? Because at the moment it's all technologically possible. It's just not culturally viable.
I think probably the interesting thing here for me, coming from an investment banking background, was obviously insurance is based on actuarial kind of models. Yep. You know, seeing what we see in algo and more advanced kind of financial trading scenarios, if you did have a real-time data platform, you know, in the sense that you could actually gather that data, then you could apply different algorithms to assess risk potentially more accurately, which could have an impact, you know, a fundamental core to the insurance company, which would be enabled by this data platforms.
Yeah, and obviously the big thing about telematics, which is fantastic about this, is this is probably the only rating factor used by insurance companies which is individual. Everything else was worked on a pooling of risk basis. This is individual, so everybody in theory gets a much better unique price, but it's whether people are prepared for that unique price.
Thomas and Simon, thank you very much. Thank you very much. Okay, brilliant. Thank you, Paul.
What do we say that's not been said already? I think we said the motor manufacturers would be the king here. They would be the ones that own the data. Cars would come off the production line with telematics devices installed, and they would really be the aggregator. You'd perhaps buy your insurance as part of the vehicle purchasing decision, and the insurance company would be very much behind the scenes. So if you're buying a new BMW or Ford, you'd buy BMW insurance that goes with that vehicle and tailored to how you drive it. What else have we said? A bit about the big brother risk here. Would consumers want to have all their driving tracked? So at the moment you have the self-selection process that's mentioned, but if all vehicles have got telematics in them, can the driver switch that data collection off? Will that be an option? Talked about existing rating factors being no longer relevant. So at the moment we rate on age and driving experience. If we've now got driving data, maybe those become less relevant. What else have we got here? The manufacturers will become the aggregators. I've said that, and insurance companies, our USP really is the data and how we analyse that data. That driving data becomes our USP. Come on, team, help me out. What else did we say? Oh, Mark, you're here. Excellent. Good. What have I missed?
We talked about insurance companies maybe selling on algorithms, because basically they'll have so much data. The value will be in the data and the algorithms, so perhaps they'll become a sort of supermarket for algorithms to all industries. Regulators will probably have a say on everything that we do in this instance and try and prevent us from discrimination. What else?
Yeah, we said, could this be an enabler for the sharing economy? So we touched this morning on the fact that you can rent a car for an hour now. Insuring for that hour at the moment is a bit of a barrier, but actually if we know how that vehicle's been driven in that hour, does that enable that sharing economy to be an easier access for insurers to play into?
Okay.
Anything we missed, Team 3?
No, very well done.
Okay.
Thank you, Paul. Thank you. We have Team 4 scenario 1 over here.
Yeah, so I think we've actually kind of gone through pretty much everything that everyone else has talked about. We started to look at again, how far can you go with this? Would would you actually be able to kind of prevent things, and therefore do you actually erode the need for the insurer if you're kind of minimising risk so much? Again, how what else have we mentioned up here that we haven't already said? We start to look at what you actually might measure, so actual mileage. Would you kind of suggest different routes for consumers to take, so that you've got kind of your quickest route, but also your most kind of your insurer's suggested route, perhaps? I think that's probably everything we've got there. I think.
Okay.
Is there anything else that I've missed, or?
I mean, as we get to the end, most of it's already been said, I suppose.
Yeah.
But thank you, Ben. And Team 5, Scenario 1, just over here.
I think in terms of what we sort of the conclusions we were coming up with was basically the consumer needs some carrot and some stick, depending on who you're targeting in terms of the insured person. If they're like some kind of young like Team 2 said, if you've got £2,000 premium and you drive like an old lady, pardon my French, you could probably get a reduced sort of insurance premium. The other thing which we were very sort of conscious of was with all these self-driving cars that are going to be coming onto the road, will there actually be a need for insurance, because the cars will be so safe and not hitting each other. That will sort of disrupt how sort of insurance in fact plays with the entire ecosystem, and it will then turn into some kind of liability insurance against Google. Because of course, if you've got like a nail in the road or something, like if you're on the DLR and some accident happens, there's no driver, but still there has to be some kind of insurance there. And we sort of anticipated insurance companies turning it more into sort of marketing companies, where they're selling, they've got access to all this data, and they can take that data and they can offer consumers added value through fuel vouchers and they know where they're going to be, and of course trying to reduce risk by giving them a free latte at Starbucks if they were going to sort of not have an accident. But, so that was us.
Thank you very much, Justin. Thank you. Right, we'll just flip to scenario number 2. Ralph Hazel, Team 5, Scenario 2.
Okay, so Scenario 2. Well, firstly, I'm actually trying to remember exactly what the difference is between Scenario 1 and Scenario 2.
Well, one is just purely limited to the car, and
Yeah.
2 is about the car and everything in the environment. So the Internet of Things for everything around it in its environment.
Okay, so firstly, we thought that it's obviously going to be a lot safer in the way that it can interact with all the things around, so that the cars will be able to will know exactly how close they are to each other, and eventually, where we talked about the self-driving and Google car that might be coming out, and so what will the insurer be offering the customer? And very much along Scenario 1, it would be side offerings such as free parking, where you should go and fill up with petrol. So then what would insurance becomes more about risk prevention rather than if the cars are so safe that they're not going to crash, then it's more about offering other services around it, such as risk prevention. So the customer, who are potentially the main beneficiaries of this scenario, where we think Google and the data analyzers, Google, Facebook, and so on. And then in 5, how can these opportunities be best harnessed with new products and services? Well, we felt that the idea that people could have much better risk profiles would be really interesting. So each individual would actually have his own risk profile. And then there could be a gamification angle where people will try and improve their risk profiles. Self-driving cars, so would there be any need for insurance? And would actually manual drivers be allowed, would you be allowed to go on roads as a manual driver? And End of humanity. I'm not sure why that's there. Okay, that's...
Yeah, thank you. Team 4 scenario 2. Team 4 scenario 2.
So in this kind of world where all the cars are talking to each other, as well as kind of the reduced crashes and claims, we thought there'd be reduced journey times, reduced better fuel affinity, and there'd be less queuing on the road. So your car would know where's the kind of road works and all the queuing, so you'd be able to avoid that. In terms of value-added services, I think we've touched on quite a lot, but there'd be more kind of customer interaction with the car manufacturers, with the insurers. There'd be ability for kind of parents to monitor where their children are driving, and better, we've kind of talked about the petrol and the car parking, improvements there. We also talked about maybe there'll be reduced street lighting. So if why would you need street lighting if or maybe you would detect when a car's coming down the road, and then it could be turned on then, so you could reduce street lighting. We also talked about maybe there's some possibility for monitoring passengers' health. So there's things in the car that can monitor how people are they close to falling asleep? Could you stop them falling asleep? Have they got any risk of a heart attack? You could have the emergency services and can't stand by. And then we're kind of looking at who the beneficiaries. So we think the customers are the big beneficiaries. We suspect insurers and car manufacturers will probably have to change to this market. And then the other big beneficiaries are technological companies and the lawyers.
Thank you very much, Michael. Thank you. Team 3 scenario 2. Yeah, thank you.
So there was kind of 2 parts to this. This was about the value-add services that an insurance company could provide, so becoming more than just your insurer, and also the preventative side of it as well. We discussed a lot of the value-add services, so some of these have been mentioned already, where you can find your petrol, the secure parking areas, collision prevention. There's something interesting about, I think, parking spaces and about preempting. So people have spoken about where there might be free car parking spaces and that you could drive to those, but there could be something even more intelligent that tracks where the individual is, how close they are to their car, so it could preempt when they're going to actually get up and leave, and then so they can time that kind of flow very nicely. What else? Managing traffic, interconnected cars. Car sharing, there may be like an opportunity to go on. Tax reductions as well, and this is something Mark mentioned that I thought was particularly interesting about how you could customise tax. So, say for example, a high earner would normally have a much higher tax if they were doing things like driving a more efficient car and different other aspects. Then they could actually get a reduction on their tax. I think there was also something interesting mentioned about like the mindset of the individual and their state of mind. So if you could track those kind of pieces of information, say for example they're under a lot of stress, they're very tired, and then they actually are in a car accident and it's their fault, then when it comes to assessing their premium the next time round, it's not just about what happened, it's about the individual and assessing their state of mind as well, and that could be part of it. So I think that's everything. Is there anything that I've missed? No? Okay, cool.
Thank you, Zara. Here we go. Team 2, scenario 2.
Yeah, so in terms of what we discussed, it's pretty similar to what everybody else has said. And I think what I'll kind of bring out is using the persona and all the characteristics that is associated with that particular persona to know whether somebody is at risk of having an accident. So, for example, if the person has had an accident before, you're able to use that data, the traffic conditions, the lighting, etc., to actually inform that person that they were involved in this particular condition before, which led up to an accident, and on that basis help them to change their behavior. So it could be they're speeding, or it might also be that they're driving below the current speed limit in a particular area. We also mentioned that for this to work, it would have to bring benefits to an entire ecosystem. So it's not just the insurance companies and the customers alone, but also involving retailers, car manufacturers, and emergency services. So for example, when you look at emergency services, if you're able to use telematics to actually reduce the possibility of somebody having an accident, the emergency services, their efforts or their resources can be better used elsewhere. So that's it briefly.
Thank you, Peter. Okay, last but not least, Team 1, Scenario 2.
We kind of, I think, approached this slightly differently because we went in a bit of a who would want it, what's in it for them. So Frank drew this lovely diagram up where you've got all of these interconnections of the road going through it and thinking about actually who's going to buy, who's going to implement it, and therefore who's going to get the benefit out from where. So is there a specific model? So we're talking about from a safety perspective, from a government scheme, and actually how does insurance influence that? Because actually insurance doesn't own that infrastructure. That infrastructure doesn't exist, so therefore who's actually going to implement that? Who actually pays whom for it? So we went down that kind of route. But we also touched on, in terms of notifications, which is slightly different to what's come up here, is actually from a safety perspective as a driver or as a person if I've got a mobile phone. So less about just motor insurance and motor cover, is actually if I am walking down that street, if I'm driving down that street, or actually if I own a shop, for example, down that street, I could actually get notified if there's any safety concerns, issues, whether there's potentially any riots, etc. going on. So that's those types of notifications that can come through early. We talked also about implementation around local, regional and international. So again, this works if it's everywhere, but if it's only going to start hitting certain aspects, how does that work? So do you then start shaping your insurance in line with where this is available? So how would that disrupt us as an insurance company? And actually what would we do there, and how would we build algorithms around that type of thing? And again, into cultural bias, that brings that into as well, depending on if we would, I think we start to talk about India as an example, to say we don't actually even know how that works from an insurance perspective. Regulation as well, actually, does this become a government-owned scheme and everyone actually buys it from the government, as an example, so therefore beneficiary might be the government actually then gets quite a lot more money back in their coffers. The last thing we talked about in terms of impact to insurance is about the fact that it's going to scale down. It's not going to need to be as big, the infrastructure is not going to be needed as much because it's going to be much more cloud-based, it's going to be moving that direction. So actually, economically, we're going to get smaller and smaller. And we just talked about the fact that we don't think a lot of insurance companies, especially big and composite insurance companies, are probably working quick enough in that route. And therefore, that is where it's a good place to be a startup. Did I miss anything else?
Nope, there you go. Thank you very much. Thank you, Ness. Thank you very much. Okay, brilliant. Well, I think that was really one of the best sets I've heard at one of our workshops. Well, that's all that remains is thank you very much for coming and thank you for supporting us. Cheers. Thank you.